All right. Checkity check, check, 1, 2. Welcome back to the Coastal Vanity Show, where we cover Bitcoin price analysis, Ethereum, and altcoins during the live shows. Bitcoin's still racing up. What we're going to try to figure out here is where are some overhead obstacles, and in general, where do bear market rallies typically go, which I've covered on non-live shows before, and I do want to give everybody a heads up that something around where I live, my internet box that sits out in my yard, it's gone, and my internet's acting funny, and it's not. Sometimes it takes like 20 seconds for a chart to load, so I likely won't. I'm not going to do this for an hour and a half today. I might keep the thing short because I might not be able to navigate screens very well, and you'll probably see what I'm talking about here in a little bit. And I'm honestly surprised that I can even do connect to here. So I'm pretty surprised that this is working with what I got going on now for streaming. So Bitcoin's racing up. And the weekly 10 EMA is up ahead structurally. There's not much to stop Bitcoin until 25,300 or 28,000, which we're going to cover here shortly. And Ethereum looks like it's getting ready to pass the baton to back to Bitcoin. And Bitcoin, as Ethereum versus Bitcoin is pulling back right now. So Bitcoin might steal back the show, although Ethereum's had it. Let's dive in and get these charts. All right. I just got off a VIP call, typically as I do on Tuesdays, and my TA Mermaid. See, I can't even. There we go. Pointed out something that I wasn't pulling up, and it's likely getting ready to come into play. Is the weekly 10 EMA. So we have structural. Essentially the last structural obstacle that Bitcoin has from a horizontal perspective is up here, and right now it's closing nice candles, 4-hour candles above it. Zoom into this channel, which I'm going to flash on and off so you can see. So this channel right here, it's not confirmed. It's not a confirmed breakout above. However, if you zoom into the top and look at the 5-minute chart, I mean, it's making, in general, higher highs and higher lows. So this is still a higher high on a closing basis, and a much higher wick has a chance to use this area as support coming up and then keep rocking and rolling. So it's not a confirmed breakout above this channel quite yet. However, if you look at other indicators, I really like the 12-hour chart for Bitcoin. I always have. I've talked about that a whole bunch. I mean, if you look at the RSI right now, on this, this is very, very bullish. I think, I don't know, it doesn't look like, this doesn't look like flash crash territory here. This has got a little bit to go, and once it is finished, it's probably not going to go straight down either. I think it's going to make a series of lower highs before it really starts rocking and rolling. And but this says that it's not slowing down quite yet. I mean, the 12-hour RSI is a big deal, and it's straight up. Yeah, a pullback can be pretty serious, 6% in price or something like that. You could get some pretty big pullbacks, but this looks like it wants to come touch this, which means Bitcoin's going to reach up a little higher. So the piecing these items together, take this off here. From a structural standpoint, from the move down, this accumulation zone, so if you look at it from a horizontal, like this accumulation zone, it looks like a confirmed breakout above. Depending on how you confirm things, if you personally need a daily closure above, all right, well, wait an hour and 51 minutes, then you'll have your confirmed breakout above this box, above that wick high right there. It looks pretty compelling to me. And if you look up, what is the next thing that is going to, offer resistance? That wick down and aligns right, almost exactly, not quite, but it's pretty close to the weekly 10. So if you make a horizontal here, and this wick low, you might think, oh, that's just a little, It's going to be hard not to do sexual puns with that one. That's just a little guy hanging down, right? No. I mean, that little guy packs a... This is not going well so far. I'm not trying, but these wicks down, when you turn on a dime, they're very, very powerful. I mean, this daily wick is probably every bit as strong as like 2 or 3 weekly candle bodies. It truly is. And so if you make a horizontal from there, and the reason I know this for certain, because this type of thing right here is how I, like to short, and it works. So it looks like Bitcoin, I mean, Bitcoin could race up to about, let's say, 24,700, 24,800, and get straight up rejected, but it almost looks like it's going to get above to try to hit the bottom of that wick. Up to 25, that's 25, it's almost on the dot, 25.4. But it could stop in its tracks right up just above 24K, somewhere around 24.8. So I'm thinking 24.8 or 25.4. And we can just put a little, a little triangle here like this. Well, what would I do? Yeah, a triangle might be okay. Something to that effect. So, which this triangle means it could stop exactly dead in its tracks at the weekly 10. And maybe I can put on a smaller chart. See how long it's taken my stuff to load here? This is why the live chat stuff might not go very well, because I can't even get my damn charts to load. It doesn't look, it's not too far away. It looks like it's going to spike right up here or up to here. So let me write this in here. 24, let's just call it 24.7 to 25.4. So that's a $700 range. And this is the next thing stopping it. However, there is a contingency to that, as Bitcoin has not confirmed broken out of its micro range. But even though it has not in this micro range, the easiest way to see it going back from this year's all-time lows from the year is about the 30-minute or the 15-minute chart. So depending on your screen size. So for me, it might be more comfortable on the 30-minute chart now. So let's let this bad boy load, and I apologize, my fiber optic network just in my whole area right now, they're doing something, or somebody went through my yard in a car or something and took it out. I don't know, it's just completely gone, and this is what I'm left with for my internet. All right, so it isn't a confirmed breakout, but with the idea that it's above the horizontal stuff and the next structural things up here that are going to stop it, I don't know. You're supposed to trust the channel, and I really want to. At the same rate, that 12-hour chart and the daily chart, I mean, it just looks, I don't know. I would hate not to respect the top of the channel, but gosh, it looks like it's going to just reach right up there to me. But the last several times, I've not trusted the top of a channel line to some degree, not for a full reversal, but for a decent pullback, at least down to like, something like 23,000. Every time I don't trust this, I look back and I should have trusted it. So, in other words, let me make my face big here. And this is something I'm stressing really heavily to my community. Like, hey, guys, I'm not giving you trade alerts right now because I'm too fishy. Or no, I think this run up, this bear market rally is too fishy for me. I think it can turn around in your face any moment, right? Because Bitcoin is almost 100%. It's close to 100% of the volume. It's literally robots and algos, right? It's literally 90% is that, and that's true in the traditional market as well. But Bitcoin's low volume. It's just there isn't retail here, so it's going to move with the stock market, and and it's also having a bear market rally, which could turn around at any time. So I think this is too fishy to be long, but it's way too bullish to be short. And what I'm saying here about the top of the channel being uncertain about it, and not really knowing if it's going to come up here or not, because it's the top of the channel. You're supposed to respect it, look for a pullback, and it's silly not to. But all these things mixed together, I just feel that this is, I don't feel that this is a very safe trading environment. And so I'm personally not taking on, if I'm, and I have entered some trades, but what I'm doing specifically is, it's like baseball swing practice or going to the driving range. I'm just keeping my swing in shape. I'm not trying to make a lot of money because my entries are very small, and my small entries are a form of risk management in light of not being able to predict, with not having a great edge. Even though the edge looks to the upside, but it smells fishy, so I don't like it. Yeah, I have an edge, right? So, but I just don't like. It's like somebody took that knife edge and stuck it in crap, and it smells horrible. I don't like it. I don't like this sharp edge on this knife. It smells like shit. I don't like it. And so and I can't stress enough. I feel that, and myself included, when I started off YouTubing, there weren't many moments where you saw me saying, "Oh, this is uncertain. I can't tell. I can't tell." I always wanted to guess and make, all that stuff. But I promise you, and I don't think it's very common for you to see content out there where it's saying this is fishy, and I feel it's not very predictable. So be cautious and lower your position sizes. But that's what I think it's very important to know that right now. I think this is a great environment to really get your butt kicked. Not quite as good as sideways choppiness. That's the best environment to get your ass handed to you, with Bitcoin just going boop right back and just staying in a 2% range with wicks up and wicks down, because the bots will just wipe both longs and shorts out on the small time frames, right? Not like big shorts and big longs from a long time ago, but the recently placed shorts and longs. Which it just plays pinball with all the liquidations of the 50 and 100x orders, essentially, and goes sideways. But right now it's a different type of unpredictability, because it's a bear market rally, and it could go higher or it could turn around immediately, and you can't tell, because you're not a market maker, or potentially even a cartel of coordinated people who all move stuff together. So this is I think this is a great time to be fearful. A very good time to be fearful. And if you're trying to learn how to trade futures, and you've come to my Discord, I keep trying to let everybody know I'm not giving trade alerts, and here's why. Because I think it's very unpredictable. So last few days I haven't done. It's very unsafe. But these are the parameters of where and why. The next obstacle up is this range here. Very likely to get a pullback, but that doesn't mean that it's going to reverse from here at all. Okay, Bitcoin, the next structure up, it could easily go to the underside, the bottom side of this area and hit 28K, or even get into this area, even 30K. It could happen. It could happen, because I've already shown that the daily 89 EMA is a very common bear market rally area for both Bitcoin and traditional markets, and I'll put that back on here in a second. So daily 89. Well, that's just above it, I guess, so that is a little lower. So in bear markets, Bitcoin either gets rejected perfectly from on a bear market rally, at least in the last two bear markets it did, and so does traditional markets. See how my chart's not loading? This is just, yeah. But anyway, so this is coming up. Once Bitcoin were to be able to get there, that'd be somewhere around 26,000. But historically, in bear market rallies, Bitcoin goes up to it, gets rejected, or it gets on top and does a double pump and then goes down. Not a double pump higher high, but it goes a high, lower high, and then goes below. So let me draw that out for you. Oops, wrong one. Let me take off the micro channel. That might help. There we go. Let me take off the weekly 10. Like that. And this would be, look how it comes over here to that. I mean, this is a very, very common shape. So remember what you're looking at. The purple line with a race above, lower high, go below. Or it could just get straight up rejected from there. But the more bullish bear market rallies with the daily 89 did exactly this. So let's go back in time. Let me put on the daily chart. And that would be, you know, that it could easily get it to 28K, folks. Like it could happen. And all the best thing that you can do right now is figure out what are the common targets and just take it one step at a time. So here's one right here. Bear market rally. So this one did make a higher high. So this one was a little different. It hovered on both sides. So it got above it, went below, made a slightly higher high on a closing basis, went down. This is the one I drew. It got above it, come back down, and this one also did make a higher high. So I drew a high and a lower high than Fumble, but something to this effect where it gets above it. If this were, so this is a bear market. This is 2018. And look how aggressive the move was. I mean, bam, consolidation, bam, 3 days of consolidation, boom. Like it can happen fast. Like it doesn't have to take a while to get up there. I mean, this could all happen before the end of next Friday, it could be finalizing around a week and a half from now, next Friday. But something like this could. So look, keep your eyes on this. Look, right. So what I drew is just this high was a little lower. So let's go over here. Bam. This could happen. And that's 29K Bitcoin. So that is the most bullish case that I could see. Second most bullish is getting rejected straight up by the weekly or the daily 89, which could easily happen around 26.2. The next one is somewhere around this area, 24.7 to 25. And then the next one down is it's done now because it's not going to get past the top of the micro channel if I can put back on. So these are literally just the best thing to do is take it one step at a time. What is the current obstacle? Is it confirmed above it? No. Well, then, you know, we know what the next target is, but it's not confirmed above it here. So it's not confirmed above this. Let's go down to the 5-minute chart, see how it's interacting with my line. So it is going back below it, but it hasn't used it as resistance, and honestly, it kind of looks like it's going to break above, but it isn't quite confirmed above this yet. And we know what the next step is. So you were essentially, instead of just guessing, so I saw somebody in the live chat say 24, it's stopping there. That's not the right mentality. I promise you, I promise you, I know what it's like to feel that way and to think that way, because I'm guilty. I'm intermittently guilty of it myself. But particularly and strongly, that was usually how I thought. That was my usual thought process. I'd love to make a guess or a range of a guess, and that's what it's going to be. It's not what you should be doing right now. Just identify what are the most likely targets, okay, upward, because price is going up right now, and just take it one step at a time. If it gets above this channel, okay, we know what the next thing is. If it gets above that, okay, we know what the next thing is, the daily 89. If it screams above the daily 89, we know that, okay, we're looking for likely a couple bounces on it. And that's it. Take it literally one step at a time. And let's go to traditional markets, because I want to show you real quick before I move on to the live questions here. I want to show you with the idea that I was talking about earlier, Bitcoin moves directly with SPX and IXIC, right? Which is, IXIC is the spot trade of the NASDAQ index, and SPX is the spot trade of the S&P 500 index, right? So Bitcoin literally moves directly with it. Hourly candles are literally the same. 1 minute candles are like 70% the same. 5 minute candles are 70. Like if it's green on SPX, it's green on Bitcoin with literally a 70% likelihood. It's very, very high, right? So if that stuff doesn't happen on SPX historically, then it probably won't happen on Bitcoin. Something else so different, but it's the same. It's the same line. And I think because the daily 89 always hovers just a little bit in a bear market, it's just above the weekly 10, and a lot of people are looking at the weekly 10. So let's go to, should we go to the futures of, now let's just do SPX itself. Even though SPX is not trading right now, but we'll go out to the 2-day chart, but I'm going to keep the daily 89 on, right? So even though I'm on the 2-day chart to see more stuff, this is the daily, so you can see it's the daily 89 EMA. It's not the 2-day 89 EMA. All right. So since 2009, what I'm saying doesn't have any basis since 2009 really, because every correction has been V-shaped, 100%. And Bitcoin is just lucky enough to have been born in the exact right moment, right here. It was born here. So every correction has been V-shaped. V-shaped, V-shaped, every single one, right? So you haven't had a true bear market. And which is why, you know, if you're ever going to say the last famous words, it's different this time, well, it's going to be different this time, but more likely to the bearish side, folks. Like, I'm telling you, that's the, yeah. If it's going to be different this time, it's going to be more bearish than anything because of this fact. Bitcoin was born here. It's been straight up with all V-shaped corrections. That is now done. Therefore, the bear market is going to be worse with an extremely high likelihood. I really hope that is clear to everybody. All right, so here's a bear market. So we're going to zoom into this area, and we'll zoom into this area, and we'll zoom into, I guess that's good enough because my chart isn't loading. So let's zoom into that area first. And look how it behaved on the daily 89. So I guess you couldn't tell you're in a bear market till probably here. So the first rally, where did it go? What's this line? The daily 89. Did it do a 2-pump type of deal? Yeah, 1, 2. Actually, this one got 3. And it hit what? That origin line. These origin lines are just perfect. They're almost perfect. They're not quite perfect. But they make mistakes sometimes. All right, but very rarely. Anyway, so look, daily 89, the same line. It's a very, very, very common line. All right, this next bear market rally, the same bear market. Where did it go up to? A 1-2 pump, boom. Then it touched this origin line one more time and hit straight down, but raced up a 1-2 pump above the daily 89. See, origin line. So previous support became future resistance. Bam. All right, let's do it again. So you probably couldn't tell you're in a bear market until, I would say here on this drop, you could, particularly this one you could tell, but let's say you could guess you might be in a bear market at that point in the moment. In hindsight, obviously, but not in the moment. So look at the same thing. Raced up to it, a 1, 2, 2.5 pump. So you had kind of 2.5 mountains before you went back. The next little rally, where did it go up to? To the daily 89, a straight up rejection. So the straight up rejections happen as well. And if this type of formation were to happen on Bitcoin, which it has in the past, and it will in the future at some point too, like you can bet your bottom dollar in a bear market, it will happen. It's just a question, is this rally going to be one of those? If this formation were to happen, that would be 28 to 30K Bitcoin. I'm telling you, it would be if this were to happen. At least 28K. And we've just saw that it happens both on traditional markets and on Bitcoin and bear markets. We're in a bear market and we're in a rally, so it is I'm not saying a strong likelihood as an over 50% chance, but it is one of the top targets that I have, and that makes it very realistic to put 28 to 30K at least as one of your major 4 options. Yeah, it's one of the major 4 options. Double pump on top of the 89 up to 28K, get rejected straight up by the daily 89, 26 and change, 26.5 area. The range down that I have on Bitcoin around, let's just call it around 25K, 25.3, that the range that I had on Bitcoin chart, and then now. Perhaps it's over now as the 4th option. But honestly, I think now it might be the least likely among those 4. Because of the 12-hour RSI. That's not how it works. I don't think Bitcoin has seen a local high yet in this rally, because that RSI is too hot. It's way too hot. It's shit coins can turn on a dime like that, but Bitcoin, its momentum, if you've ever seen X-Men, how Juggernaut, something about inertia and momentum or whatever, it's unstoppable. Like Bitcoin it's similar to that, especially on the 12-hour chart and above. I mean, it has momentum. So those are the 4 areas that I'm looking for on Bitcoin. And again, I'll wrap up with this and I'll look at live questions. Very important. Don't just pick a number and guess. Just know what the levels are and take it one step at a time. If it gets there, that's cool, man. We knew that it could have gotten there. All good, bro. Like that's the way you should be looking at it. Because if you're just picking a number and it goes to 26K, right? You're going to be hyperventilating. So what do you want to do? You want to be hyperventilating, or do you want to be like, cool, man? Like, I'm in California on the beach, Newport Beach, man, right? Oh, and the waves are swole. Like, you want to be on Newport Beach, and you want to take it easy, just by taking it one step at a time. And if I can add one more thing, just realize that it's going to be impossible to know which one. So this is a great time to be fearful in the market as well. This is an exceptionally good time to be have fear of the market. And I cannot stress that enough. Respect the market. I recently made that mistake, and I've let my the Discord community know all about it. I got overconfident, and I let them know all about my mistakes there. But so I want to stress to everybody, this is a great time to be fearful. All right, let's move on to the live questions. Hopefully I can do this with my damn charts loading slow. All right, so for everybody on here, I'm going to skip straight to the questions that have a username with an emblem, because those are my YouTube tiers. And part of the deal to be a part of either tier is that I skip tier questions first during the live chats. That's one of the perks. All right. What do you think of ADA? Gosh, I didn't want to jump to ADA because I just kind of gave my game plan on there that I showed my Discord, but all right, whatever. All right, we're going to cover ADA, so let's jump into Cardano. I'm gonna try that again now that my I'm gonna record this part. So sorry. Now that my chart is loaded, all right. Now let's take a look at Cardano. One of the major things about it is in a 300-day long channel, so it's almost a year long here. And I can take off the daily 89 because it doesn't really follow that rule quite with Bitcoin. So I feel that unlike Bitcoin, Cardano it's got a little bit more predictability to it right now. It's in a nice channel, which this is essentially like allows you to color between the lines instead of just having a sketchbook and you got to draw an elephant. Well, yeah, and that's what you're trying to do on Bitcoin. Bitcoin is looking kind of unpredictable right now, right? So it's like somebody says, draw me a damn elephant. Well, I'm not good at drawing. Well, okay, here's a kid's book, draw in the lines. Okay, great. Give me Cardano. Cardano, honestly, it's looking pretty from a trading perspective. I think the amount of predictability is a little bit better. So let's dive into this 300-day long channel, and it goes to the top, right? So it's Cardano's looking pretty good. I really like trading Cardano, even though from a project standpoint, I am warming up to it since it seems to be it looks like it's getting ready to survive pretty well its second bear market. So you can't take that credit away from it. Its chart is not doing that badly. All right, so let's dive in. And I've hated on Cardano before, but it's like I give credit where credit's due. It's not doing anything like Matic right now, but Cardano is it looks like it might not be a horrible choice for accumulation in the bear market. All right. What I'm noticing on Cardano is this. Outside of you have these lines to color in here. These don't look very equidistant. See how my chart's not loading? Yeah, either somebody took out my fiber optic cable box, internet box, or something's going on. But these lines need to be a little bit more equidistant. There we go. Okay, so what I'm looking for here is horizontals that align with my next line in the channel. So I essentially have, and what that is, so if you could see two lines crossing, it's double resistance, and it's just double the chance that it'll at least bump its head there, right? And it also, it's kind of interesting, it also, this might not be an accurate statement, but the way I like to visualize it is when you have a horizontal cross with a channel, or wrong way, I can't do it, whatever. You can see that behind me. Those channel lines, the way I visualize it, it kind of increases the chance price wants to race to it. but it also increases the chance it's going to bump its head on it, which makes it a decently probable, like a pretty probable trade, right? And so you have a pretty clear horizontal coming in somewhere around I would say about 540 to these wicks here. So Cardano really respects wicks. I cannot stress that enough. So wick down and wick up, this small range here, this is 540 to 547. So let me write that in here. It looks like it's going to race up to there, to me. And will it stop there? I'm not saying it'll stop. I'm saying it has a high probability at least pulling back, and I feel that it has a decent chance of racing up there, both together. And so I'm not calling for a reversal here. Rather, it looks like it's going to want to hit its head there and then, make a higher low somewhere or some type of low, some type of pullback here. So you have a horizontal crashing into the channel line, as you can see here, and that's where it looks like it's going. But if you zoom out, it's not too improbable that it can hit the top, right? I mean, it's played with the top of the channel quite a bit, and sometimes it does it aggressively so. I mean, so this move really, if it hit the top, that would be closer to 60 cents. If it wicked above, it would be 60 cents. But if it hit its head perfectly on it, that would be like 0.595 or so in a couple. So if it took a few days to get there, it'd be about 590. So 59 cents. 59 to 60 cents is possible as well. And that would probably more align with Bitcoin being bumping its head on the 25.3 level, which is just above the weekly 10. So if you see Bitcoin just above its weekly 10, which it kind of looks like it's going to happen, then that's roughly 60 cents is probably a good point for Cardano to be at when Bitcoin is playing with its weekly 10, maybe just shy of its daily 89 at that point. So you have some pretty clear levels for Cardano. This range here and 59 to 60 cents. And honestly, Cardano feels a little easier to play right now. That's what I'm feeling on with Cardano. This range here and 59, a small 1 penny area up here, 59 to 60 cents. These are the next two areas for most likely pullback. And again, I'm not saying reversal. I'm saying attracted into it and then some type of pullback and then perhaps up higher or perhaps not. But it's just one step at a time. So I'm only keeping it one step at a time. Those are my two areas of interest. And how deep the pullbacks will go, I really don't know. It's all going to depend on paying attention to traditional markets. Like crypto is traditional markets. I'm gonna say the B word, so trigger warning for folks who don't like it used for gender, but just for the lack of a better way to say this, I mean crypto is essentially traditional markets' little bitch right now. It pains me to say that. Satoshi would be rolling around in his grave if he knew that were the case. It's not supposed to be that way, but it is like that now, and it won't always be. Bitcoin will separate from it, and the way it separates, it could be down without it. But I think it'll be the opposite. I think this bear market, Bitcoin has a decent chance of separating more in a more bullish sense than the traditional markets. So that's what we got for Cardano, and honestly, I'm really liking the Cardano chart. I think it's way more predictable than Bitcoin and perhaps even Ethereum right now. So if you are out there clicking around with your money, just consider this. I'm not giving you any trade signals for this. So this area here behind me, I'm not giving you a short signal. I didn't tell you where to put a stop. I didn't say how big of a position size on a percentage basis of what you have in futures. It's not a trade signal. This is TA, and I'm not showing you how to trade that necessarily, but these are the next two levels. But if you want to, if you are somebody who, does a little bit of trading, if you want me to zoom out on this so you can see where I started this trading channel, and I think I've posted this on Twitter before too. Actually, I know I have. If my chart would freaking load. But it goes back all the way to the top. And again, I prefaced this live chat with internet issues, And I'm just really glad I'm even able to stream. I can't believe I'm able to stream. If my chart isn't even loading, like, what the hell is this? I guess this is a horrible moment to try to show you, try to show you my chart since it's not loading. But I've posted this on Twitter before, but oh, here we go. So the exact top is not the top of the trading channel. The exact top is the line below. So the all-time high of Cardano is the second, it's the one, it's the line under it. And these couple wicks, these November 8th, and I'm recording this, so if you want to go back and watch my Cardano video that I upload tomorrow or whatever, it'll be in there. But November 9th rally and January 18th are the top of the channel line, right? And then you can kind of visualize this and pause the screen and try to, do your best to make the same trading channel. It would be, I feel that it'd be highly beneficial. And if you don't trade Cardano a lot, it's something to consider because it's really a pretty chart. it's really a beautiful chart. I really enjoy it. All right, and that's Cardano for you. Yeah, the way Cardano moves is just really nice. Unless it's going sideways forever and getting boring, which it's done a couple times, but so is Bitcoin. All right, so let's keep looking here. Let me scan down for the community members' questions to the emblems. It's obvious looking at almost every or any coin's weekly chart, people just don't want to believe it. What's obvious? Oh, Jimbo John, what do you think of it? I'm not for sure what you mean by that, Jimbo John. All right, and then VRA. Okay. Yeah, speaking of, so I'm not going to record VRA stuff, but speaking of VRA, so I recently made a video trying to warn people, not of any claims that I have, because I don't have any claims. I don't really follow the coin very much. But a lot of times the comments that I get from either Twitter or YouTube, sometimes they're from decent sources, but I don't know if the source is good or not. So my last Veracity video, I simply made people aware that I've been getting a lot of fuddy comments from people who type like more than halfway intelligent people, right? And I let people know that I've been seeing that, and I suggested you need to look into that yourself. I made no claims, I don't know anything about it. And then I got a lot of shit for it. I'm just trying to help people. They are not my claims. You go back and watch the video. I made 0 claims. 0. I simply made you aware of claims other people were making, and it's starting to get loud, so I thought I'd bring it to y'all's attention, VRA fans. That's all I was trying to do. Actually, that's all I did. And anybody who thinks otherwise simply just didn't listen, or maybe there's a language barrier or something. I really don't know. And I still don't know. I don't do fundamental analysis, especially in a bear market. It's, in my opinion, completely pointless. But if you're a big fan of VRA, that it wouldn't be pointless for you to look into that stuff, right? So let's go ahead and take a look at VRA. Maybe. So it seems VRA has had a very recent pumpity pump, and it looks pretty aggressive. So let's dive in and kind of check out the anatomy of this. All right, and per my last Veracity video, where I simply warned the viewers of FUD that I'm hearing, unconfirmed FUD from unconfirmed sources, and I got a lot of shit for it, and folks say, oh, he doesn't know what he's talking about. Well, you can't, first off, I bet out of all YouTubers on Earth, I have more Veracity video views than anybody on Earth, or in the top 3 on all of Earth, right? First off. Second of all, who else warned you that price is likely going to come down this low, which it just barely didn't hit my box? I gave you this box way back here, trying to help folks visualize how low it's going to go. So that should be proof. I'm just trying to help people. You can't find a single person who back in this month here, where was it? Yeah, last year. warned you that it's going to get double O, in the 0003 range, right? And it almost got there. Warned you way back there. You can't find another source of information who warned you about that at that time. Perhaps afterward, yes, when it became more obvious. So, I just don't see how there's so much hate on that video, especially when I made no claims. I'm literally here to help you. And this chart, like the facts are, the facts kind of show that. I was the first person to warn you of that. I almost guarantee that. All right, now, this is a pretty darn big pump. This is a big one. So let's start looking at the anatomy of this. 56, that's online with Ethereum. Ethereum's gone up 50% as well. How short of a time frame has it done this? Is this a healthy one? It's pretty aggressive. So it all kind of started here. So you had 30% in 2 hours, which Ethereum did 20% in 3 hours. So that's pretty similar. And then you had another race up, 8 hours, another 33%. I mean, it's not so crazy that it's unhealthy, because you do have this origin line up here. It kind of looks like it wants to tap that. It looks like it wants to tap this line. And so it kind of looks like it's going to go to 0077 to me. And so let's see if that matches with any horizontal. So if we're going to take that and look left, is there anything over? Yeah, there's a lot of stuff over here. I mean, this entire section here, right? So there's a lot of stuff happening from a horizontal perspective that aligns with this. Yeah, to me, it kind of looks like it wants to come hit this. Maybe even a wick above. Maybe even as high as 008. I could easily see it hit 008. Now, I guess not. I'm not going to call this an invalidation point. I'm actually coming to not like that term at all, actually. I like my threshold of becoming improbable. So your threshold, right? What's your improbability threshold of that happening? And I think since it's a very short-term time frame move, I would say I would use the 1 hour EMAs for doing this. If they'll load, since my internet is acting all funny, taking 20 seconds to load a chart. All right, let's do the 1 hour 55. No, let's do the 21 and the 89. Let's see how it plays with these. Yeah, I would say as long as the 1 hour 21 EMA. All right, so here's how I would do this for this coin. And I'm picking these two EMAs just because how short of a time frame this pump is, right? It's very short-lived. I would say this is, if you're below the 1 hour 21 and you've closed and opened a candle under it, which it has not yet, and it closed a candle, I guess it closed one, but it didn't close and open candles under it. So whenever you start closing and opening candles between yellow and purple, 21 and 89, I think that's your, roughly 50-50 zone. Either way could happen. Either, it could be done or it could have another pump, right? So this is kind of like your 50-50 zone of no man's land, just not much of an edge. Once, but specifically when you're opening and closing 1 hour candles within here. When you go below the 89 EMA and close a candle below, I think then it becomes like the probabilities of downside have begun. And you might say, obviously, because it's way down there. Well, that's not how it's going to happen. These are probably going to compress to some degree. So it'll look like this. If this were to start going sideways, you'll have something like this. So this zone will shrink and shrink and shrink and shrink. You'll get something to this effect, right? So I'm more thinking when you're in the zone, price like this, opening, closing candles, it's roughly 50-50. So that's a bunch of 50-50 land right there. Let's make price green. So price path is green, right? And this is the 1 hour 89, purple, 1 hour 21, yellow. So this is a bunch of, you can't tell either way, right? Below the 21, above the 89. In general terms. Will it play out like this? No, I'm not guessing. I'm just showing you, right? This is not my guess. If you're opening and closing candles above this line, I think it's more probable you're going to get another pump. So as of now, it looks like it. I mean, I would guess it's going to have more upside. Really, I mean, it's that simple. Just yeah, it looks more probable that's going to get another height up. Now, once all this happens, and if it does end up doing this and it gets below, opens and closed candles below the 1 hour 89, I believe that's more probable at the time that if you look left, whatever high that happened, I think it's probable at that point that your local high looking left is the high of that whole move. But it's not a death sentence. It's the point where I want to be very clear. It's the point where it flips to being more probable. It's not a death sentence. It doesn't guarantee it. It's just statistical probability. Simply like flipping a fair coin, it's statistically always 50-50, right? And it's important to understand, when do I get the coin flip chances? It's when I would say it's roughly when you're between here. And when does it get better than coin flip chance to the bearish side? Well, when you're below the 1 hour 89 it would be my guide for that. So instead of giving, and again, I cannot stress this enough, I challenge you to get away from the thought of, I'm guessing this way, and start seeing it probably bullish if this, not much of an edge if here, and probably bearish if there. Just think with a 3-zone mentality at all times. That's actually a good way to. I've never said that before, have I? Think with a yeah. It almost sounds like a football like I'm a football coach. This is a 3-zone defense or whatever. I never really played American football, so I don't really know, but that's what it sounds like. But think with a 3-zone mentality. Your zone of probably bullish, your zone of you can't really tell, and a zone of probably bearish. I really challenge you to start thinking that way, and with veracity, I would use these EMAs. So right now, it looks like it's probably still bullish, and it's going to go up to that other target. 3-zone mentality. Yeah, it looks like it's going to come up here. I would say 0.008 would be where we're gonna see it go from a statistical probability standpoint as of now, and those probabilities can change, and that's what we got for veracity. Okay. All right, let me get my coffee. I really like this mug for some reason. Partly because when I take this off, it's got such a wide mouth, I can put a bunch of ice in there if I want iced coffee because it's so freaking hot outside. Ooh, that had a lot of coffee grounds in it. All right, here we go. That comment was from earlier, just bear market pumps. You can see the pattern clearly in each. Yeah, bear market pumps, they do behave similarly. You only have a few options, really. In the weekly 10 and daily 89 are usually about where they go. Kadena. All right. So I think, veracity, it's looking pretty good. I don't think it's going to be a straight up, straight down thing as of now. Okay. And so I'm not going to record this so I don't get a bunch of shit on Kadena. Gosh, just like similar to how I warn people of what I heard from unconfirmed sources about veracity. I heard FUD, and I thought I'd make people aware of it, trying to be helpful and not trying to receive hate mail. Thanks for the super chat. I'll get right to that, Guy Renat. I'll hit that next. I'm gonna make you aware of something I heard from an actually confirmed good source, but I don't know. Obviously I can't confirm it's true, right? And I don't know if that person could either. I think it was on, I'm not going to name another YouTuber, but it was on a YouTuber who may or may not have hosted Michael Saylor. Okay. He didn't say it himself. One of his star guests in one of the, I guess, like a 3-person chat, he mentioned that he said the word we, referring to all 3 of them as if they already had talked about this, but said, we are very bearish on, shitcoins such as something. He compared Kadena to Dogecoin. And he specifically listed Kadena. I don't know why. That's not my claim. I'm not making any claims. But I just want you to know that there is a good source of information out there who has his personal reasons to be bearish on it. I don't share those reasons. Can I be any clearer that I'm not creating any FUD? I simply want to make you aware of a decent source saying something, and I don't know his rationale behind it. But just be very wary that they're, maybe it is just the season for FUD because it's a bear market. I don't know. But I thought I would do my due diligence to let you know that I actually did hear a good source of information kind of FUD on that project. So just heads up, but I don't know what it's about, and I can't confirm that, and I'm not making any claims. All right, so please understand what I'm saying, and now don't send me hate mail. Gee whiz, I'm just trying to be helpful. I still can't believe there are so many people with chest-pounding coins in a bear market. It is like that is evidence that this bear market's far from being done. If people can get defensive about shit coins in a bear market, man, there are not enough people who have exited this market yet. Not even close. And again, I'm not saying anything bad about Veracity or Kadena, just general statements. If people are getting defensive about altcoins in a bear market, that means the bear market ain't over. All right, so, and not even close. All right, now we're going to look at Kadena now that my chart has loaded. All right, well, it went straight up to that horizontal, and it did hit my black triangle. That is strange. I kind of thought it wasn't going to hit it. It looks like it's going to get more. It looks like it's going to come hit this yellow line. Yeah, I don't think this is done. All right, so let me make the chart less messy. This is way too much going on, and I can delete this triangle. All right, so what we have here, and again, Guy or not, give me just a quick minute, and I'll get to your super chat question. We have some horizontals that I have labeled here. Okay, so I'm going to get them out of the way. So horizontal, horizontal. I have trading channels in blue. Okay, and the orange and black part is the point of control of the trading channel that is in a downward sense. So all the lines going this way, like this, are the trading channel. And the yellow lines going this way are origin lines going essentially like a trading channel, but they're the origin lines going back from the beginning of time, right? To get a clearer look, let me go to the 12-hour chart maybe is enough because this is a young coin. Yeah, so you can see here that this trading channel gets the top of Kadena. Similar, so this is a 300-day channel just like Cardano actually. So it gets the top of it, and almost 100% of all trading volume of Kadena since its top has been in this, right? Okay, and these lines here get integral points in all of its price history. See how this yellow line gets that bottom there, and roughly that wick down here. This line gets that, here, let's zoom in. It's just key points. Right, so it gets that wick up, all this consolidation, boom, right? And so these are the origin lines. So those are essentially the three things we have playing with here. Horizontal, which are horizontals, downward sloping trading channel, and upward sloping origin lines. It looks like it's going to break through this horizontal to me now that it's gotten above this trading channel line. And it looks like the next one is the upward sloping. It looks like it wants to hit this. I would give this, and the longer it takes to get there, the higher it'll go, because this is an ascending line. So this could pull back all the way to here. Honestly, I think Kadena's move is still intact as long as it stays over 179. So Kadena's move is intact as long as it's over 179. So let's make that clear. And that might be your, instead of invalidation point, that is your threshold. That's your 3-zone mentality area. But anywhere below this, probably bearish. Anywhere, somewhere here, maybe not so much of an edge, right? And anywhere in this box or above, probably bullish. So your 3-zone mentality, probably bearish, a little neutral, can't tell. Anything here and above, probably bullish. 3-zone mentality. That's how I would say that. I think that's a lot. I think it's just much more realistic than saying invalidation point. Anyway, or at least it does for my brain. So I think it's intact as long as it's above here, and as long as it's above 179, I think it has a strong chance of or a good chance of coming up and hitting here at $1.93. So I would keep my eye on $1.79 and $1.93. And the longer it takes to get there, I mean, hell, it could be $1.90, in a week it'll be $1.94. So, give or take a penny both ways, depending on when it hits this line. And these are the two things I'd be looking out for. $1.79, $1.93, and rock and roll from that point. Let's make sure I'm not missing anything. So this is a lot of structural analysis. Let me mix that with an EMA here. Let me go to the weekly 10. So the weekly 10 is way up here, and that's at the top of the channel. So if it hit $1.93 and pulled back, I mean, technically it could easily go like this and then finally hit the top of its channel. So it might not be done. So I'm not calling for a reversal at $1.93. Rather, that it's going to hit its head and probably pull back to some degree. Very likely. I'm not saying reversal there either. But after $1.93 hit, it could get a higher low, and it could easily pop up to $2.12. That's not my immediate target, but if Bitcoin gets to 25,000 area or 24.8, you could easily find Kadena at $2.12. And that would be happening as Bitcoin is over 24K. If Bitcoin's under 24K, you're very likely not going to see Kadena at 212. And that is a very highly likely, that is a pretty good area to think a reversal has a good chance of happening at that time. Because it's the top of the channel, and it's a 300-day long channel, and it's the weekly 10, so it's double trouble. Yeah, that would actually be this is not financial advice, but I would, on a personal basis, I would begin being interested in, if I were spot trading this, that's where I would kind of unload very comfortably my Kadena if I were spot trading. I'm not going to mention future stuff because I don't want to come across as giving alerts for that kind of shit. But from a spot trade, in a bear market rally, kind of selling into a rally, personally, I would feel comfortable doing that, and I'm not speaking for you, and this is not financial advice. I'm not a financial advisor. That is Kadena and the 3 levels and why. All right, so Gyronaut, AVAX, might have missed it. No, you did not miss it. All right. I would have said, Gyronaut, if you already did it and I missed it, then give me my money back. That's what I would have said. All right. Okay, so let's do AVAX. It's already at its weekly 10. Damn. All right, so AVAX, kind of like Matic, is pretty hot. I mean, this is outperforming Ethereum and Bitcoin, both those. So AVAX and Matic are hot, and they're AVAX is right at the top of its micro trading channel, which you can see behind me here, and its weekly 10, which is kind of a bear market rally target, but since Bitcoin's weekly 10 is way up at 24,700 and it's not there yet, if Bitcoin were to hit its weekly 10, AVAX is going to go decently above it, and it's going to break out of this micro trading channel that you can see behind me. So let's dive in and start looking at the anatomy of this AVAX pump here. All right, so again, this trading channel, I have it on the 30-minute chart. It dates back from when Bitcoin slammed down to 17.5, kind of starts around the middle of June 30th. And it's not a long-term channel, but it's a micro trading channel. And the weekly 10 of AVAX, which is a common bear market rally target, it's coming in right at the top. I would honestly suspect it's going to wick above it, and $28 would be my next target. It is $28. What am I saying? It's going to reverse there? No. However, I am saying a mixture of two things. It does look like it's going to be attracted to it. So listen to what I'm saying. It looks like it's going to be attracted to it. And B, it looks like it'll probably pull back from there. I'm not saying reverse from there and dump, but it looks like it'll go. It looks like, just imagine somebody jumping on a trampoline, trying to reach for something that a friend has held up really high. Like you're getting really close to it. As you reach up, you get so close, right? But then you go straight back down, not straight back down, but you make a higher low and you bounce again, right? You can bounce again after you go hit the trampoline. But it looks like it's going to be attracted to that area and bump its head on it to make a higher low before then busting out. Does that make sense? So I'm not saying reversal here. I'm not saying 100x short there. Rather, that is an area of interest for those reasons, and that's how I'm trying to show you how I visualize it, because it often does really work out that way. So it looks like it's going to wick above its weekly 10 up to here. Now, if it does hit that and pulls back and makes a higher low and keeps its structure and Bitcoin keeps going, its next pit stop area of interest is going to be in the 30s. It's this origin line here, and this origin line goes back to the beginning of its time, and I could zoom out to show you what that blue line is. That's really, it's, let me put on the daily 89 as well. Yep, that is right at the daily 89. So daily 89 is like your second, it's your little higher, more aggressive bear market target, and so your next area of interest is $32. And so that's an origin line and a major EMA, which that EMA is like the bear market rally target. So the weekly 10 and the daily 89, I'm telling you, like, you should not forget that information in the bear market. Traditional markets and crypto and Bitcoin, that's where the target is on a it's a pretty strong bear market rally, I'm not going to lie. But it happens, and that's the target, those two things. Weekly 10, daily 89, bear market rallies. Lock that into your head forever. Because it's likely not going to change. It's probably not going to change in your lifetime. It's probably going to be that way. It'll probably be like that way for the rest of your life. Yeah, I would say. So it's good to remember. And that's what I can see. So $28 and what did I say? $32. Those would be my areas of interest. And again, I'm not calling for reversals at those two levels. Rather, I can see price getting attracted to there and pulling back. $32, okay, that's got a good chance to be a reversal point. But all right, so now let's take a look at this origin line here, this blue origin line. Zoom out so we can see the significance. I'll go to the daily chart on AVAX. Oh, I didn't clean up my object tree, so I can't flash on and off my my trading channel. So this is gonna look a little sloppy. But yeah, this origin line has never been hit before, so it's not super significant. So we're just gonna dive into there, maybe to the, like, 2-hour chart. Yeah, there's not a whole lot of interact. Uh-oh. That just got corroded. Oh, good. It went back. Awesome. Yeah, this blue line's not... It got a lot of resistance areas here, so... That's about all prices played with it. So it's not extremely significant, but it's significant enough in being supplemented or complemented by the daily 89 that it could have the effect of drawing price up into it and then rejecting it to some degree there. And that's what we got for AVAX. So I would definitely keep those two levels on my radar, and I just showed you all the reasons why. And if you want to, just remember that this trading channel, if you want to, like, pause this video, which I am recording it, so this will be uploaded to YouTube if you want to go back and see how I did this. Even though it looks like it's going to break out of it soon, but it goes back to the middle of June. This is the weekly 10 is red, and this is the daily 89. And these two, I'm only on the 2-hour chart. Hell, I could go to the 1 hour if I wanted, but I'm using the MTF indicator right here to have those larger EMAs on as I'm on the 2-hour chart. And it's literally called, so you can see the indicator there, MTF EMA. Right? And that's, honestly, this is all you need right now. Are those three things: weekly 10, daily 89, and this little trading channel, and you're going to be set to go. And it'll give you the lines between which you would want to draw, and it gives you a great guide, and that's AVAX. All right. Geez, Gyro, well, I'm going to have to, can I message you somehow? Yeah, I mean, I might as well just shoot you over a free month of the Cryptillion Discord, since you literally just paid for it. So if you can reach out to me on Twitter and just say, hey, I'm Guy Ronot, I will shoot you a coupon for that. All right, NRCH. I've never heard of that. Is that crypto? Yep, must be. Okay, so first off, there's not much liquidity in this. So, oh, I've looked at this before. Look at it. Man, why is it all corrupted? How did I make this chart? There it is. No, that still looks awful. I must have... Wow, this is breaking all-time highs? versus wrapped ETH. Okay, well, so it's not breaking all-time highs versus the dollar, but my contacts are getting dry, darn it. Contacts are dry, and the internet's slow, and my back's hurting. Well, I mean, this doesn't really have enough liquidity to trade. So, I mean, at best, just whenever you see a chart like this, I mean, at best, that you could swing trade this, but I would not choose this to try to click around with my money regularly. So just I want to be very clear with that. And even really fairly large cap coins like Hex, even their chart looks like this because Hex isn't supposed to be traded. Right, you're supposed to hold on to that shit. So, and the users of it really kind of take that to heart. Like, it's not well traded. So, this coin is not well traded, and I doubt it has good of a reason as Hex does, to have really low volume. But Hex, but Hex's chart looks the same, and it's just you just aren't really supposed to trade it. This means that and what that means is you can't buy and sell where you want to. With decent sized amounts, essentially. So if you had $5,000 of this and try to sell all at once, I mean, you'd be selling it a lot lower than what you anticipated. Is what this means. It's all-time highs. So, and ETH is making a run on Bitcoin, or it's pulling back now. This is actually pretty bullish if you view it like this. It's consolidating. This honestly looks really bullish. Hit a high in March, nice pullback, zoom back in, got above, higher low, breaking above. I mean, I would say the next stop for this, gosh, if it stops, I'm not saying it's going to stop there, but I would say 0.00297. How much of a rise would that be? Yeah, I mean, that would be 12% versus ETH, and ETH is going up. So that would probably be like a 30% increase on price of you versus the dollar. That's a pretty bullish move, as little as it looks. But I would say 0.00297 is its next pit stop. I don't see it getting blocked by this next line here. I don't think it's going to get blocked by this. If you zoom out and look at it from a horizontal perspective, this is too bullish to stop just right there. It doesn't look like it's going to go boop boop. No, I mean, actually could. It could go boom and pull back and try it again. So I guess you have a couple price paths that would make sense. So it bumps its head, pulls back, does it again, and goes actually higher up to 0.00311. So that would be 0.00311. So pullback actually can help it go higher, really. But if it got to this blue line more immediately, it would be like 0.0029. 0.00. Let's just call it 0.009. 003. 003 is in the cards for sure. But if it pulls back first and starts ripping up, it'd be like more like 311. 00311. But yeah, this is not bearish versus ETH. This honestly looks like something that was in a bull market that pulled back and it's getting ready to go up again. And I would not be surprised if it went higher than this. However, as I said earlier, with the idea that this rally smells fishy. It's a bear market rally. It's going to turn back around and very likely make lower lows, right? Bitcoin's likely going to make lower lows. Just a question of how high this goes. So I would still be fearful, with this, but in the meantime, within the context of a bear market rally, with the idea that the bear market rally could easily keep rocking and rolling, this looks like it is a pretty good target, but I would not be surprised if it went beyond that. But it's taking it one step at a time. I can't stress that enough. And so I've given you the levels there just to take it one step at a time. Instead of just guessing it's going up 100%, Nope, just don't even speculate on anything higher until it passes 311 or roughly 0.003. If it gets above 0.003 or 311 and use it as support, okay, then start speculating on the next move up. So that's what we got for that one. All right. Hey, Tim, next time you need EMA fill between mixed timeframes, try MTF custom moving averages by... Dude, yes. Oh, my gosh. By No Joe Bidness. Each MA can be set to its own time frame. Oh, hell yeah. And I added optional fill. Booyah, dude. Oh, my gosh. Heck yes. All right, so somebody in the comments... And I'm going to put this on my Bitcoin chart so I remember it. I'm just going to place this over here. Yeah, so I can look that up later. Awesome. Beautiful. Yes. Thank you. Thank you. That means you're really, you're not just paying attention, but you're tuning in a lot. So, because... You heard me say something to that effect last week or whatever, so I really appreciate that. Yeah, I'm gonna look into that. I might start using that. That'd be badass. All right. Interesting. Yeah, it's supposed to do it automatically. That's a YouTube thing. I can't control YouTube working or not. If you're so who else is in there? Guy Runot? Patrick Van Limpt. Why wouldn't you have? I mean, Patrick, I wish I could. It's not like my Discord. I don't have access to troubleshooting what's going on the YouTube side. Yeah, I mean, I've already, the last time you said you didn't have the emblem, I went back into my YouTube to make sure, okay, did I change something? And I haven't. It should be automatic. So perhaps do a quick YouTube like customer thing on the chat and see what they say. I really don't. I don't know how to troubleshoot that. I don't even think I have a way to, because YouTube's a beast here. All right. Okay, so somebody's asking, are we bullish or bearish? I mean, it's definitely more bullish than bearish. I'll tell you that. So just Bitcoin 12-hour chart. I really like it. This EMA, it's straight up. I don't think you can be bearish on this. You can be bearish on the 5-minute chart for like a 2% pullback on price within the context of this bullishness. So you could be micro time frame bearish, sure, but just overall bearish, like as in tomorrow it's going to be a huge red candle. No, there's no way that like this is aggressively bullish. Aggressively bullish. It's actually very, very aggressive. Let's take a look at I think the futures for traditional market have opened back up, so let's see what they're doing. So these futures markets for the traditional market indices, they trade 23 hours a day, 5 days a week, and you made a higher high in price and a higher high in RSI, so there's no bearish divergence. This is just straight up games being played. That's not natural. That's stupid. Wow. I guess it did happen at an intersection, so I guess that kind of makes sense. Actually, it's a trading channel with an origin line. Boom. So that makes sense. And it went straight to my point of control. So actually, on the RSI, it looks stupid, but it literally followed my lines exactly. I actually didn't realize that. Look how perfectly my lines got this. I'm telling you, my lines, if you see them on my chart, you might want to draw them too. Wow, I didn't realize how perfectly I got that. Did I play that perfectly? No, absolutely not. But I did not anticipate that exactly happening. But these lines just give you it gives you parameters of the most likely possible, the boundaries of probabilities, I guess. So with that idea, I mean, it looks like it's not going to slow down until it hits up here. So traditional market futures don't look like they're going to slow down quite yet, and this is too high up to be a wick above. Like this here was a wick above the blue line, and then it came down. So this is tied for the second most important line in all of traditional market history, right? And at least for this chart, for NASDAQ. That's tied for the second most important straight line in all of NASDAQ composite futures history. And so this is soundly above it. This is like a confirmed breakout. Even though it never used it as support, but it tested it once, twice, 3 times, breakout. You don't need to come down and test it again for a confirmed breakout. It's the 4th try, boom. And that's why, honestly, and sometimes I forget what I'm about to say, and I burn myself, but if you're trying to short the same line 4 times in a row, that's probably not a good idea. Even if it's an origin line, whatever. And really, you should, shorting the same line twice, I do that on full positions. If I try it a 3rd time, I reduce my position size, have a tight stop. But 4th time, you don't try shorting the same. If price is bumping on the same line 4 times, you don't really try shortening it because it's more likely to break through, especially on the 3rd or 4th try. So it looks like, yeah, honestly, this is kind of supporting the idea that Bitcoin is not going to be done yet. How much percentage is that? It looks like it has to hit this line before it's going to pull back. It's another percent, so that'd probably be another 2 to 3% on Bitcoin before it has a pullback. And Bitcoin really could race above this, and this could come all the way up to here first. So let's zoom out to see what the significance of that line is. And that's the top of the, this is the top of the bull market of all traditional markets. So that's where this starts, this trading channel. So honestly, it kind of does look, since it came up to the point of control, corrected to the bottom of the point of control, used it as support, came above, used the top of the, it looks like it's going to hit the top line. Maybe not exactly. It could pull back before it gets there and then hit it. So I'm not saying it won't have higher lows first. It actually kind of looks like it will. It'll have boom, higher low. Gosh, this bear market rally is not done, folks. I actually think at this point it looks probable that NASDAQ futures are going to hit 12.7. And is the daily, I'm kind of wondering, is the daily 89? Oh, look at that. Look at what's up there. What have I been talking about? The daily, that's exactly what the daily 89 is. It looks like it's good. So Bitcoin is not done. Wow. Honestly, this alone, I'm thinking my favorite target is 25.3 for Bitcoin. I think that, in my opinion, I think that's the most probable target. Yeah, if NASDAQ futures are likely going to hit that, that's 25.3 on Bitcoin easily. It's going to have a lot of resistance there, and it could be the top of the bear market rally instead of one that gets on top of the purple line. So a lot of bear market rallies actually get on top, as I showed you earlier, right? I think I used SPX for that, but I mean it could go boom, 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 and then come back down into it, something like that. And your daily 89 would be like this. And so in traditional markets, when it interacts with the daily 89, I think we saw more cases that the first pump, or the last pump was bigger than the first one, as opposed to a lower high. A couple of them were a lower high. But this could easily happen. And honestly, this just happened on Bitcoin. It went above its trading channel, I think twice now. It's 300-day long trading channel. It's about 9-10 month long. It went above it, I think, twice, and then came back into it. So this is a possibility, and that would mean 30K Bitcoin if that were 28 to 30K Bitcoin if this were to happen. But it's one thing at a time. I'm not guessing this is going to happen. This is probably the most bullish thing that I could see happening over July, right? Yeah, this is the end of this July 26th, so start cooling off after that. This is the most bullish case that I can see that's reasonable to even kind of conjecture right now. But it's definitely among the top 3 most likely things to happen over the next couple weeks. So, wow, yeah, this is yeah, I don't think this is the party's over, folks. I think this bear market rally is going to go a little higher. Okay, all right, I did do an hour and a half. All right, guys, I gotta wimp out on you. I gotta be done here. My back is still on fire. and I'm not feeling the best right now. So because the pain, chronic pain sucks. Even though it's only like a 3 or 4 out of 10, it's just constant, and it's driving me freaking crazy. And I'm ready to like go do something else right now. So even though I do appreciate, I'm really glad that I was able to do this because my internet connection is slow and I was able to stream. So thank goodness. It always makes me happy talking about crypto, at least for an hour and a half. And then if my back's hurting, then I probably could be happy laying down with my feet up. Actually, I need to go hang upside down. That's what I'm going to do. I'm going to go hang upside down right now. Just so I can show you my contraption here. I have a chin-up bar with a weight belt, like a leather squat belt, and I have a ratchet strap. So I don't actually have the ratchet part, but the strap part, and I have it looped around and tied above on the chin-up bar up high, and I have it tied to my belt, and I put the weight belt on, and then I hang upside down, and it hangs me from my waist. So the focal point of pressure, or relief of pressure, is exactly at my lower back, as opposed to hanging upside down from your ankles, where it's all the ligaments and everything from your knees and ankles and hips. It spreads out the relief, and it really focuses the relief point on my lower back. So I'm getting ready to do that. I'm on fire right now. So I will see you all 6 p.m. on Thursday here in a couple days, and I'm sorry I didn't get some more questions. My internet's slow, and I answer questions in depth. So that's what we got. We'll see you Thursday. Thanks everybody for being here.